Welcome to the weekly close live here on the Passive Income Podcast. Joseph, how are we doing this week?
It is Friday. It is after work, and I'm seeing the sun for the first time in like 6 days. So it's doing pretty good.
Nice. Nice. What has it been raining there or?
Like crazy. It's been nonstop which is, it's been great. We were in like a really weird drought for a couple months, and now we've gotten like 2 weeks straight of rain. Like we needed it, but
Yeah,
doesn't mean I like it either.
interesting. All right, so let's get right into it. I'll pull up the closing numbers for the week, and while I do that, you can go ahead and chat about marketplace or anything else you'd like to plug and
Yeah,
talk about. Go
I,
for it.
I I really don't have a lot to play. I guess yeah, always marketplace. Hey, we don't have the app live yet. We're working on it. Well, FA's working on it. I'm cheering him on from the background. But hey, come sign up marketplace.com for our weekly newsletter, and every week you get an update on where we're at with the app.
All right, fair enough. Okay, let's dive into it. Like every week, we'll start here in Canada on the TSX, the Toronto Stock Exchange, closing the week at 22,814. Of course, this is priced in CAD, Canadian dollars. On the one-day chart, really good week let's flip over to the 5-day. Big dip here. I think a lot of things, that was just probably following the US there Thursday. Big dip Thursday morning, but recovered nicely before the end of the week, closing at that 22,814. Just shy of the 52-week high, or actually that's the all-time high as well, 22,996. Moving right along, jump over to the S&P 500, closing the week at 5,459. And if I'm not mistaken, yeah, the S&P had a rough week,
Yep.
right about
Yeah, we
starting right about there.
we had a bit of a sell off this week. I don't like you and I were talking before we hit record, before we hit go live. I had busy weeks I haven't followed, but I know it wasn't great.
Yeah. So there's that same dip that we saw in the Canadian market on Thursday at 10 a.m., right down to 5,397. Recovered a bit, another dip into Thursday afternoon and Friday morning by the looks of it. A little bit of recovery today, but looks like it might take some time, but you never know. Maybe next week it just bounces right back. And
I loved somebody. Of course, I posted daily marketplace TikToks. I posted something about CrowdStrike this week, and I got several comments that were like, "But is the market rational? Is it really though?" No, my friends, it is not.
right. Okay, the Dow Jones Industrial Average. Again, obviously that S&P was in USD, and this is also in the good old greenback. Still on the 5-day chart. The Dow closing the week 40,589. Again, shy of that 52-week high, and I believe that's the all-time high, that 41,376. But still for the 5-day, not bad. Again, we see this same thing here on. Actually, it's kind of showing it more on Wednesday, the big dip. Thursday, it was still low, the same as the TSX and S&P. Has another dip here on late Thursday afternoon. That's right at 3:45. And then by Friday morning at 9:30, it bounces back up above 40,000. Yeah, to dip below 40,000, 39,940.
Yeah, why
And
not?
yeah, it looks like it had a hit a high there of 40,722 at just around 1 p.m. earlier this afternoon. And then, like I said, closing the week at 40,589. Again, we'll point out how poor I am in every country. Well, I'm poor in Canada too. Let's not, let's call a spade here. But if I were to try to go to the U.S., my money is not worth too much. Canadian dollar closing the week at 72.29, which it had a rough week too. A lot of red, just going lower and lower. The Bank of Canada cut interest rates again yesterday or the
Oh,
day
they
before.
did.
Yeah, so
I
another
did not hear
25
about
basis
that.
points yesterday. I think it was yesterday. Might have been Wednesday. Yeah, so that probably plays into that a little bit. Again, you can kind of argue the merits, and obviously we all know that cutting those rates is a balancing act between getting the rates lower and fighting inflation on the other side. So I guess just take it with a grain of salt. But yes, the Bank of Canada did cut another 25 basis points down to 4.5% now. Was that 5%? They cut, was it back in June? That first 25, and then now another 25 to get it down to the 4.5.
Come on, Jerome Powell. Let's get it together. Come on, bud.
Not too often that the U.S. follows Canada's lead.
Yeah, maybe today is the day, though. I mean, not today literally, but you know what I mean.
Yes. Crude oil on the good old New York Mercantile. A barrel of crude closing this week at 76.85 in USD. Looks like it had a bit of a rough week too, in a lot of red here on the 5-day chart, all red. Looks like everything on Thursday morning took quite a hit. I'm really not sure what was the news yesterday morning that caused everybody to sell off.
You know, somebody out there probably knows.
Yeah. And again, we like to look at Bitcoin in Canadian dollars just because it's such a much higher number. Of course, Bitcoin never closes. But as of right now, currently at a price of 93,947, which I believe I was just actually looking at Bitcoin in USD as well. It's got, I think that's around 68. I think it's above 68 USD right now.
God, dang it, you're gonna make me look it up again.
You go for it. You do that while I jump over to gold.
67,936.
Yeah, so 67.9. I think it was at 68 not too long ago when I was looking at it.
We'll give you the credit on it. Rounds up.
Sure. Gold closing the week at 2,385 in USD. The 5-day chart again red, and that same time Thursday. Actually, it's showing it more Thursday afternoon. That's 2 p.m. on Thursday, yeah. But
all I can find is it has something to do with tech. Don't ask me what, but it has something to do with tech.
Let's look at the Russell. We do that sometimes. You know, like jump over to Chicago just for fun. Closing the week at 2,260, obviously priced in USD. Its 5-day chart is green. Actually, looks like it had quite a run up from Monday morning at 9:30, opening the week at 21.96, all the way up to, like I said, closing at 22.60. Not too far off of its 52-week high.
Why not?
Why not?
Why not?
The NASDAQ.
NASDAQ had, I know this one I know for fact, the NASDAQ had a rough week.
Yeah, so the NASDAQ closing the week at 17,357. Again here on the 5-day, right there, that's the big hit. Tuesday, late afternoon, Wednesday morning, Wednesday dropping, all of Wednesday drop. And then there's that same dip at 10 a.m. Thursday that I think every other market that we've looked at so far has had that same dip at 10 a.m. on Thursday, right?
Investors around the world all got scared at once.
Yeah, pretty much. I think that kind of sums it up. And of course, we like to jump overseas to the FTSE in London, just so I get to say the word quit a few times.
Yeah, you've earned it this week, Dave.
The FTSE 100 in England, London, England, closing the week at 8,285 quid, Great British pounds. Again, Thursday morning. Now, here's something I don't honestly know about how Yahoo Finance works. Is this Thursday morning at 10 a.m. Is that GMT or is that Eastern Standard Time?
You know, that's a great question.
Sometimes I say smart things, right?
I know. I mean, like, when building the marketplace app, like we just had this talk with how like we plan to run our platform,
right?
And at least the way we choose to run it, which I believe is also the way that like Robinhood runs it, is all times you see on the app will always be in Eastern Standard Time. They'll be in New York time, always and forever, no matter where you are in the world. So that said, I would assume this is in London time.
I think this would be that same 10 a.m. Eastern time that we've seen on every other chart, every other exchange.
I don't know. I mean, honestly, who's to say?
Who's to say? But it did have a nice run up after that dip. Look at that climb Thursday afternoon, Friday morning, and it looks like it had a great day earlier today. Of course, everyone in England, in London, is already at the pub this evening. And of course, Aikido. We cannot forget about Aikido watching tomorrow morning, Saturday morning in Japan. Uh, the Nikkei in Tokyo closing the week at 37,667 Japanese yen. And of course, we always also like to point out that if I'm poor in the US, I'm even poorer in Europe. The Canadian dollar closing the week at 66 cents to the euro. So,
Hey, Dave, I can actually answer this per the Yahoo Finance site. That is in local time. So that FTSE is in London time.
so that is GMT then. Wow, Greenwich Mean
Yes.
Time.
And
That seems
yeah.
odd to me then, because everything else would have been 10 a.m. like Eastern time, right?
Look, man, don't ask me to do time zones. I'm
Well,
gonna
no,
bring
just
up.
I'm thinking if that same dip was at 10 a.m. in every time zone, like, or that 10 a.m. Eastern time zone, it should have been what, 3 p.m. in England. Anyway,
Okay, yes. When you put it that way, yes, you are correct. I was gonna say I'm gonna pre-apologize to everybody watching at home. Woo, guys, it's been a week and my brain is a little dead. I'm gonna do my best, but this is definitely gonna be a. You're gonna watch this episode for the commentary and our attempts at humor, not for the analysis.
oh, I don't want to even say humor, but we do joke about it a lot. We do have our fun with our love sack.
I knew that's what you're about to bring up. I knew it. Dividend Boom, are you in the chat?
They liked one of my posts, and I was like just thrilled about it. Yeah, that's how immature I am. I'm 51 going on 14. I know. I'm
See,
well aware.
I can't say anything because a while back, Jarritos, the drink company, commented on one of my tweets.
Yeah.
And I called my mom.
Okay. Monday, the earnings calls for the week. Where are we starting?
Hey, our boy's here. What's up, Boomer?
Oh. Boomer.
All right, so we got to start. We got to talk Verizon. Of course, got to talk Verizon. Dave, I got to ask, as a dividend investor, what are your overall thoughts on these like American telecoms?
Well, actually, very similar to the Canadian telecoms right now. And watch out tomorrow morning for a new episode of the Passive Income Podcast, where my guest, Alexander the Investor, and I were discussing sort of the debt burdens of the telecoms. And
oh, yeah,
we were kind of like in agreement that, hey, you know what? They're still paying a great dividend. People are still paying their cell phone bills. You can kind of, I know a lot of people, you know, they continue to see me post like, oh, I bought another share, another 2 shares of Bell Canada, which is the biggest telecom provider in Canada. But they're trading, or have been trading, at near 52-week lows now for months, right? And I'm just like, yeah, but that company's been around for over 150 years, and they're not going anywhere anytime soon. So it's like, I don't know. Did I answer any of your questions?
You did, and like I like that you added the Canadian perspective on there, because I'm looking at, like, I mean, let's real quick, let's pull up the AT&T chart. AT&T, a stock that is down 23.5% over the last 5 years. How's T-Mobile doing? They're publicly traded too. T-Mobile over the last 5 years is up. Okay, maybe not. T-Mobile, bad example, up 125.5% in the last 5 years. But I guess your more legacy ones, or at least what I think of the legacy ones, AT&T's down hard. Verizon's down, call it 30% over 5 years. I mean, they've had a heck of a run over the last year, up 18%, 6% year to date, and but down 5% this week. So I don't know. I personally do not have any direct investments in American telecoms, because I'm like you said, that debt burden scares me.
It is scary.
They did hit earnings right on the head. $1.15 a share estimated, $1.15 a share actual. I believe revenue is what actually, completely flat, 32.8 billion over from Q2 2023, so year over year. Profit margin of 14%, also the exact same. Net income was only 4.59 billion, which is actually down about 1.5% from a year ago. So we're seeing, I don't know, Verizon. I haven't really deep dive. I used to hold a lot of it. For me, what was a lot of AT&T, like a few $1,000s of AT&T, and I'm out of it now. And I don't know. I look at Verizon, and it's almost like looking at the same company but in a different color.
Okay.
In my opinion, again, not investment advice, but hey, I mean, hopping over to Truist though. Continuing banks, I got to shout out Truist, Charlotte, North Carolina based company, been around since like the 1870s. Definitely one of the older American banks.
Right.
Up a little more than 4% this week. Did beat earnings, 91 cents a share actual, 82 cents a share expected. Call that a 10% earnings beat. I mean, there's not really much to say about Truist other than they were pretty in line with the banks we talked about last week. Pretty good. I mean, honestly, it's kind of weird to say that in like the high interest rate environment we've been in for so long, but bank earnings across the board for basically all of your U.S. banks, especially your brick and mortars, pretty good. We saw a lot of green in that sector over the last 2 weeks.
Yeah. Another shout out to Alexander the Investor, podcast coming out tomorrow morning on the Passive Income Podcast on YouTube. And yeah, him and I talked quite a bit about banks as well. So
I'm a little biased. I basically work in the banking sector, at least an offshoot of it.
right.
Definitely my favorite sector of the market.
Anything else before open on Monday that caught your eye?
Not really. No. And this is like, can we talk about how big of a Monday this was?
Yeah, Bank of Hawaii. Oh, Bank of Hawaii. It's so small, I could barely see it.
I've never heard it pronounced that way.
No, it was the font. I was sorry, my poor old eyes. I saw the A as a U, and I'm like, yeah, apologies to anyone watching in Hawaii right now.
But if you'd like to fly us out, we'll give you an apology in person.
Exactly right.
We will make the time.
Are we done before open on Monday? You want to jump over to after close?
Yeah. I don't have a whole lot to say after close. Real quick, I do want to shout out SAP as a company. I hate all of you. In college, I had to take a management class where all we learned was SAP for a semester. I hate all of you.
Right.
Whoever made there is a special place in a very hot afterlife for whoever made SAP and NetSuite. I hate all of you. Just saying. That said, let's hit Nucor real quick.
Sure.
I'm a little biased. Another Charlotte-based company, actually, if I remember correctly. I'm a little biased. I think I can say this now since he no longer works there. I came into introduction by Nucor. Blue Collar Investment worked there for a while. Charter, who has been on your podcast.
Yes.
Down about 3% this week, probably because he left like a year ago now. 268 a share actual, 235 a share expected. Basically, I didn't really like get into this. But exactly, but I know for a fact they did lower their expectations for the rest of the year in 2025 due to lower steel prices. And I guess as a manufacturing company who sells refined steel and things, you want that price to be high.
Yeah.
And then I also just kind of another quick hit while we're here. I looked up Crown, which Dave, I gotta say, I was a little disappointed to find out was not the whiskey brand.
That would be
Crown Royal. Yeah, I figured that one out. So I looked up Crown because why not? What do? They do packaging and equipment for things like aerosol, basically aluminum cans, like soda cans, beverages, and a few other things of the sort. Also, like your canned soups. They make a lot of those packages, which, I don't know, that's kind of cool. Stock's at 12.5% this week. Did see a nice little earnings beat, $1.81 a share actual. $1.58 a share estimated. Again, we're going to call that about a 10% beat, maybe even a little more if I'm doing my math in my head right. Maybe like 9.5% beat. I'm very scared that one day somebody at home starts checking my numbers on that. And if I remember correctly, because this one I actually did not write down, um, people were very surprised with the better than expected EPS. And they're overall a pretty well-rounded company. And full year EPS looking to be 6 to 625 for the full year EPS, which is massive. Beverage can shipments are up 6% globally, with North America alone seeing a 9% increase. Who knew? It's canned goods time, everybody.
Yeah. And so again, me working directly in that industry, I know exactly who Crown is, and there's only so many manufacturers of cans, one in North America and then two like globally, right? There's I think about 4, possibly 5. Actually, there's a couple new ones actually opening here in Canada, so it might be up to 6 total companies in all of North America that produce the cans that canned goods go into. So,
I
that's
didn't know
kind of
that.
part of it too. Is like there is competition, but not a lot, right?
Today I learned.
Yeah,
Well, yeah, I honestly did not know that.
yeah. Um, anything else for Monday? We're gonna jump over to Tuesday.
Well, I'm good to head into Tuesday.
Yeah, we should get going. We're already 20 minutes in. How time's
Oh
flying
god.
here this evening. Spotify, UPS,
All right,
GE
so
Aerospace, General Motors, Coca-Cola, Comcast, Polaris. That's all before open on Tuesday, before we even get to Tesla, Alphabet, Visa, Texas Instruments. Oh my goodness. I hope
yeah,
everyone has scheduled the next hour and a half to just sit back, relax, and listen to us two talk about everything that happened this week. Wow.
don't tell me that. I have to check into a Southwest flight. In
What, this
like an hour
evening?
and a half. No, yeah, oh yeah. So we'll talk about that because Southwest reports earnings tomorrow. We'll talk about that in a minute. I have thoughts. Spotify up an even 10% this week, which is, I mean, that's I round a lot. No, it's 10.00, which
Oh,
is kind of
wow.
cool. Spotify, $1.43 a share actual, $1.15 a share estimated. Which was, kind of unexpected. We saw a huge tech sell off this week, which Spotify was I guess immune from.
Yeah.
But
Yeah.
the big thing is, I mean, you look at like Spotify's main competitors, which are like the Amazon Music and the Apple Music. I don't think it's called Amazon Music. I think it's something else, but you get the point.
No, I think it might be called Amazon Music.
Well, either way, Spotify in terms of subscribers and also like profit margins is kicking both of them bad.
Interesting.
And that's we saw a little increase, in both Apple and Amazon stock this week, but Spotify, I mean, they are the monopoly of their industry, which, I mean, I have to say it. I love Spotify so much as a product. Like I put tens of thousands of minutes into Spotify every single year.
Wow.
But I complain about Netflix for being the dominant in their industry and having basically monopolistic control over a subscription model business. Oh man, I want to give Spotify a pass so bad, but like
because you're biased, because you love them, because
I
you
love
use
it.
them.
Exactly, 100% on point. But like, man, Spotify, you raised my prices like last month, and in this call, you said you're probably about to do it again. You have hit the event horizon.
So there's the other thing too, right? Like how much can they keep raising prices? And then from what I understand, these streaming services, like all of them, whether it's Spotify or Apple or whoever, like pay the artists next to nothing.
Next to nothing.
And I mean, from the artist point of view, they have to be on them to get their names out there, especially the smaller artists that, it's like, oh, if they get 10,000 streams and they make like $3 or something.
Yeah, that sounds $3 sounds a little high.
Yeah, yeah, exactly, right. 10,000 streams and they get 30 cents or
yeah. It's I don't even know exactly what to say because again I want to love Spotify. I really really do.
apparently
But
so does your dog.
yeah, well, I don't know. I think she hates Spotify because if I have the headphones in, sometimes I'm not giving her all the love she wants. But I mean, the price raises, like, I guess Spotify, in my opinion, again, this is just my analysis from a consumer standpoint, might be a little worse because I mean, I feel Netflix has a lot of close competitors between, like, I know you're a Prime Video fan, Disney Plus exists, HBO Max exists, several of those other ones, but like, who really, like, really competes on the same level that Spotify does? Because, like, I know I have a lot of bands from like the 90s that I listen to that released like one album. They're not on Apple, they're not on Amazon, but they're on Spotify along with like the unreleased bonus tracks.
Right.
So, you want to talk about a monopoly? In my opinion is a straight monopoly in the music streaming service right now. We'll look at Spotify.
Right. I think we need to move on because, like I said, we're only on the first call of Tuesday morning, and there's so much just here on Tuesday.
I'm gonna give you UPS real quick that we're gonna skip over because we got to talk Tesla.
You don't want to go through GM or Coca-Cola or Comcast?
Not particularly.
Or Polaris? Is that Polaris down there?
That is Polaris, yes. UPS down 11% this week, which, I mean, they've always kind of been the redheaded stepchild compared to FedEx. I hope I have that right. They did miss earnings, $1.79 a share actual, $1.99 a share estimated. Yeah, I mean, there's not much to say. I mean, it's UPS. They've been a little rough, especially in the profit margin. Because what you can see right here, revenue at $22 billion was like exactly what Wall Street expected. Then you see a 16% miss in EPS. That's a net income problem, which comes down to that is a net profit margin problem.
Right.
Which is a trouble that has plagued basically all of your large shippers. I mean, forever. But is right now plaguing UPS potentially the most. And I mean, we see it with things like jet fuel and prices, the increasing cost of like cardboard and gas and things. I mean, it makes sense, but I mean, I guess for UPS, I mean, from a Wall Street standpoint, you can't just sit back and take it.
Right.
You got to do something about it.
Okay, so just quickly, General Motors. They make cars. They've been doing it for over 100 years. Coca-Cola,
they sure do.
They make soft drinks. They've been doing it
sure
for over 100 years. They're not going anywhere anytime soon.
Warren Buffett.
Yeah. Comcast. That's a U.S. like broadcasting.
I want to lump Comcast in with NetSuite and SAP. I hate all of you.
Okay.
Comcast customer support. You know what you did.
And Polaris. Really. That is the outdoor recreational vehicles. I believe it's the same company. Like, basically, I know this because my four-wheeler is a Polaris, and the logo looks identical to the one that's on my four-wheeler, so that's what I'm guessing. I don't think there's another company called Polaris that would have the exact same logo.
I would be very surprised if they did.
But I know you want to talk about Tesla.
Dave, we got to talk about Tesla.
We have to talk about Tesla.
I mean, really got to talk about both Tesla and Alphabet. They both had rough weeks. Tesla by their own fault, Alphabet by somebody else's fault. So, I mean, let's just real quick, let's go ahead and hit Tesla. Dave, how much did Tesla stock go down this week? If you guess negative 16.5% this week, you are correct. And why is that? Well, I mean,
it went down 16?
16.5.
16.5%.
Did miss drop. Earnings, 62 cents a share estimated, 52 cents a share actual. Dave, Tesla's revenue increased 2% year over year. That said, how much did profit margin increase year over year?
Well, it sounds like it didn't.
It didn't. It went down 45%.
Ooh.
From Q2 2023. Maybe
I need to buy 2 Cybertrucks.
At this point, if enough of you subscribe, Dave might have maybe able to afford the third one.
Well, I'd give the third one to you, obviously. Just need more subscribers. All we need is 100 or 1 million. I just got to pass Mr. Beast in subscribers, basically, and then we'll get then everybody gets a Cybertruck. The same as he does, right?
Real quick, this is weird. I've started seeing Cybertrucks driving around. I live in the same town as Mr. Beast, for everyone who doesn't know. I've started seeing Cybertrucks drive around my town, and I'm like 100% that sure because he's giving them away.
Yeah.
Like he has videos of him giving them away, and I'm starting to see them around town a lot. It's weird. But yeah, Tesla, man, you guys, 45% decline in net profit over a year ago with an increase in revenue.
Wow.
What is there to say? Like, I mean, like Tesla has had a very, very rough year. They are now down 12% year to date. But like about 2 weeks ago,
So
really,
just let me break that down for a second. You bring in more money with revenue,
yes,
but you've made less profit. So that means the money's
a
going
lot less.
somewhere.
Yes,
It's going vanishing somewhere out into the ether.
of course. Yeah, that's what money does. It just goes in the ether. But like Tesla's had a very rough start to the year. At one point, being down over 30%, over 40% even year to date. But like we've seen some massive increase in Tesla stock heading into the October 10th robotaxi announcement, to the point that like as recently as like July 10th or even July 16th, or even no, July 22nd earlier this week, Tesla was green on the year. They were down negative 40% to be now green on the year, just to report this.
Ouch.
And you kind of have two like thoughts in the analyst perspective from what I read online anyway, which were that either Tesla's screwed, like what's going on with Tesla, or you have then the idea of well, maybe this is not so bad, it's only temporary. Like shout out Kathy Wood actually, who said Tesla is about to see like an $8 to $10 trillion increase in market cap after their robotaxi announcement. Which 8 to 10 trillion, guys. Tesla's current market cap, just to be clear, is about 700 billion.
Right.
That's like more than a 10x increase. I mean, maybe she's right. Maybe Tesla will corner the robotaxi market. And I do think she's totally right that whoever gets the self-automated driving up and running first will corner the market.
Yeah, first in wins.
But
hold on.
Without a doubt.
Did you say 7 trillion market cap or somewhere in that ballpark?
7 billion.
Okay. Because I was like, Nvidia and Apple, and those are like at 3 trillion or something.
Yeah,
like
no.
that. Like you're talking. Sorry, I misheard.
No, I mean, if we go back to even like a year ago, Tesla was comfortably over $1 billion or over $1 trillion, if I remember correctly. Nobody quote me on that, but I mean, when you have a stock that's now down 12% year to date, you lose that $1 trillion club pretty quickly.
Yeah. I don't recall Tesla ever making it into that club, but maybe they did. Maybe they did. I don't know. Don't quote me. Don't at me. I don't know.
2021 was the last time they were over the 1 trillion market cap.
Oh, they did make it. Yeah, well, that's going. You can't.
Okay, yeah.
You remember things from 3 years ago.
I mean, no, I'm not going to make that joke. So let's jump into Alphabet, Dave. And I'm just going to tell you right now, nobody cares about Alphabet's earnings call. It's not important. We don't need to talk about it. Alphabet stock's down 6.5% this week. They beat earnings, $1.89 a share, actual $1.85 a share. Yes, man, it was a pretty humdrum earnings call. I mean, it's Google. Come on, guys. Dave, did you hear about the OpenAI announcement this week?
I did not. But yeah, obviously Alphabet is not just Google, but YouTube as well. And obviously we know that is sort of a money-making machine, right?
I mean, make no mistake, I am not concerned about that long-term health of Alphabet. They're not going anywhere. But Alphabet had two very rough news this week. So first off, cybersecurity startup Wiz. Google was set to buy them out in a $28 billion deal. It's going to be Google's biggest buyout ever. And people were hating on it because back in even like May, Wiz valued themselves at like 19, 20 billion. So Google was about to pay like a 40, 50% premium on buying them. But I mean, whatever, it's Google. Believe me, they have the money. And people were believing because let's talk about real quick. Why is Google falling so hard behind Microsoft and Amazon? And it's because Google Cloud does not compete with Microsoft Azure or AWS. It doesn't. It is a significantly inferior product. And while a sizable and like up and coming cybersecurity startup like Wiz wouldn't have fixed Google Cloud, I mean, it definitely was a huge step in the right direction. Mm-hmm. Well, Wiz said, never mind, we're just going to go public and we're going to IPO instead. So that was some bad news. And then let's add on. Then I think it was Thursday night. It was either Wednesday night or Thursday night. It might have been it had to be Wednesday. Because I remember when I was talking to people about it. OpenAI announced they are launching a new search engine powered by ChatGPT.
Right.
Which is a direct front. So, I mean, everyone at home has Googled something. You've probably seen it. You Google a lot of things right now. and you get Google Gemini pops up an AI answer.
Mm-hmm.
And I mean, I'm sorry, Google Gemini, I'm a firm believer it's one of the better AI products on the market, but like OpenAI ChatGPT, it has the market cornered. They are heads and shoulders above absolutely everyone else right now. So I mean, if the ChatGPT people, who are burning billions of dollars a year, by the way, are about to make a comparable search engine with a better AI feature, Alphabet's main product and their main revenue driver is still the Google search engine, and it has been for 20 plus years now.
Yes.
And suddenly we're coming up with like what might be the first ever real credible threat to their profit puppy.
Yeah. Well, people don't say I'm going to Bing something or I'm going to Yahoo something. People say I'm going to Google.
Honestly, until you just said that, I forgot Yahoo even had a search engine.
I know.
I mean, Bing literally pays you to use it through Bing rewards, and just nobody uses Bing.
Can't pay people to use it.
Yeah, I mean, I'm not going to say it's a bad product because I don't think that it is, but
just people, like you said, it's that brand recognition of over 20 years. It's just Google's always been there. Google is at this point still the best search engine. It does sound like there is some competition coming. Like you said, OpenAI and ChatGPT joining up, that could actually be a little bit of a disruptor in that space, right?
Oh, without a doubt. It has the potential to be a massive disruptor.
Interesting.
So with that said, with it almost being 6:10, Dave, I think we move on to Wednesday.
Okay, quickly though, just want to point out that I had my visa fully paid off, so I'm allowed to continue being a member of the financial Twitter community.
Proud of you.
Yeah. Yeah, you're right. Where is the time going? Texas Instruments, maybe next time. Capital One. Wow, so much going on here on Wednesday as well. Before open, Veritiv, AT&T, Amphenol. Not even sure what that is. Lamb Weston, Next Era Energy. Thermo Fisher Scientific, that's another one that I'm familiar with through work. Boston Scientific down there at the bottom. After close, Chipotle, Ford, IBM, Whirlpool, Waste Management. Such a garbage company.
You just had to say it.
Yeah, we all do. We all have to use it. I'm sorry.
So I mean, let's go ahead. Let's just go ahead and we'll start with AT&T because I hated on Verizon earlier. AT&T and Verizon, again, it's like the same company. One's in red, one's in blue. I know that's probably like an unpopular opinion, but that's honestly how I feel. Look at these stocks. AT&T stock down about 0.6% on the week. Up about 12.5, pushing 13% year to date, 28% over the last year. But then we get to that 5-year chart, and they're down 23% over the last 5 years, and they're down 36% since IPO in 2000. So not looking great for AT&T. They did dead on hit earnings, 57 cents a share.
Whoa! AT&T's only been publicly traded since 2000.
The chart that I am using only goes back to January 30th. Let's see here. When did AT&T?
I would think they would have to have been like an IPO 100 years ago or something.
Well, I mean, they were only founded in 83. No, maybe not. Okay, so I'm on Robinhood. March 19th, 1992. You are correct. So the chart that I'm using only goes back to 2000.
I would have even thought prior to 92 that AT&T would have been publicly traded, but
I am on investors.att&t.com. American Online became a publicly traded company on the NASDAQ on March 19th, 1992.
Okay, America Online. AOL? Is AOL a part of AT&T?
No. They're part of... No, you're right, because AOL is part of Time Warner. And who owns Time Warner? Is it AT&T?
Who knows?
AT&T owns Warner Media. Yeah. I mean, we're all learning things on this podcast. Corporate reorganization. That's actually, that's a really good point. But either way, stock's down 36% over the last 24 years. They did hit earnings, 57 cents a share actual, 57 cents a share estimated. I mean, I mean, they did add almost a million new customers in Q2. That's good news. But I mean, still, I mean, we are such a heavily indebted company that pays out a dividend at what, like 8%? Okay, about 6% right now. You can't cut the dividend because I mean, too many people know AT&T as a dividend stock. I mean, that's what most people invest in, but
Yeah.
I don't know, man.
Well, didn't they actually cut the dividend like 6 or 7 years ago, in the late teens?
Let's find out. (2022) they cut it.
Oh, that's even more recent. That's
Yeah, because they
long ago.
they spun off one of their subsidiaries in 2022 and cut the dividend because of it.
Mm.
Because they spun off to pay off some debt, basically. Oh, they spun off Warner Media in 2020. Dave, I don't know what's happening anymore, man.
Yeah, you're making my head spin.
I'm making my head spin.
Should we move on from AT&T?
We should move on from AT&T. I want to talk about Chipotle.
Never been there. I don't think we have any in Canada. It sounds absolutely delicious.
It's because it is.
I love watching Ryan Trahan slap the burrito in his videos. If you don't know who Ryan Trahan is, he's a big YouTuber with 10 or 15 million subscribers.
There are 25 Chipotles in Canada.
How many?
25.
And none of them are near me.
Dave, from what I've heard, I don't think a lot's. Oh, no, they're up to 43 as of this month.
Okay. So there must be some in Toronto, which isn't that far away from me.
Let's see here. Ontario has 26, British Columbia has 15, and Alberta has 2.
So there would be like one in Calgary, one in Edmonton, in Alberta.
That's what I would assume.
And then, BC scattered around the lower mainland, and then Ontario.
Toronto has 15 in their city limits.
Is there one in Kingston?
No. But yeah, I mean, let's get into Chipotle. So Chipotle, fresh off the stock splits. If you see them trading under $50 a share, it's not that concerning when they were trading over $3,000 a share, just like about a month ago.
Yeah, 3,200 or something.
Yeah, they were pushing 3,300, something ridiculous. But either way, stock's down 7.23% this week. We
should also point out, I think probably anybody watching probably knows that it didn't just tank from 3,300 down to $60.
No, they did a 50-to-1 stock split.
That's right. I'm sure most people watching would know that, but let's just point it out.
Oh, why not? 34 cents a share actual, 32 cents a share. What I thought was kind of interesting. So Dave, we talked about this a few weeks ago. The trend on TikTok has been to blast your Chipotle server on TikTok to video them to guilt you into giving you bigger portions.
Oh,
remember we talked about that?
I do recall talking about the Chipotle. Wasn't there somebody that went around and said, "Oh, the serving sizes are inconsistent"? He went to 50 around New York State or something. Or
some investment banker did that, which I thought was super cool.
Yeah.
But so in this earnings call, Chipotle CEO, whose name I know it's Brian, I think, but I don't know his last name. Is it Brian? It is Brian, but I'm not going to give you his last name. It's just Brian to me. Me and him are close. We chat. I was texting him this morning. Me and Brian. I can't believe it's his first name that I remember. But anyway, so he talked on the call and he was like, "Hey, I understand how unhappy people are with our portion sizes right now. So I will direct our workers to start being more generous with the portion sizes." And he said straight up, that is going to cost the company $50 million a year, but we don't care.
Yeah, that's a very interesting one, right? Like balancing that customer satisfaction with making the investors happy.
Oh, I mean, what is Chipotle's market cap right now? I mean, 68 billion market cap, 50 million. I mean, we're talking less than 1/100th of the company.
Right.
Did I really not write down their revenue?
But you know what I'm saying? Like, go back to that customer satisfaction and at the end of the day, that really should also make the investors happy because that means the customer is going to come back. It's not going to be the customer storming off and
Oh yeah.
posting a TikTok video that gets 100,000 or a million views or whatever, and kind of portrays the company in a negative light. You're much better off to have them going and posting TikTok videos that are like, "Wow, look at the size of the burrito I got," right? Which gets 100
Yeah.
views because nobody cares about positivity in the world anymore.
And this was a killer call. Let's just talk. Chipotle made 9.87 billion in annual revenue in 2023, and they made over 3 billion in Q2 2024. What's 50 million a year? Total revenue is actually up 18% year over year. Same store sales are up 11%. Operating margin is up 17% year over year. I mean, I don't really know why Chipotle stock fell like it did, because everything I read about the call is that they did great, other than that $150 million cost. And like, oh no, they're going to lose less than 1% of revenue. Oh no.
But like I said,
I
at
don't
the end of
know.
the day, I think it's a good thing. Basically you're spending 50 million, but you're gaining.
Oh
You know what I'm
yeah, and like
saying?
you're even more so guaranteeing your loyal customers will come back.
Right. Do we have anything more to discuss about Chipotle?
I do not. I want to do a very quick hit on Ford, who also had a rough week.
Yes.
Ticker F, which I think is a huge miss. They're down 23.5% this week, Dave.
You
Missed
think the
earnings
ticker symbol
hard.
is a miss?
So was the earnings call. 47 cents a share actual, 68 cents a share estimated. And the big thing was that they, I don't remember the exact number. And at one point I remember looking at the exact number and thinking, man, I don't need to write that down. I'll just remember it. Well, your boy didn't write it down. He doesn't remember it. Real quick to everybody out there, if you tell yourself, I'm going to write this down, I don't have to write this down, I'm going to remember, that's a lie.
Yeah,
You
are
don't
lying
know it
to
yet, but it's a
yourself.
lie. But they lost like several or like multiple billions of dollars on EV manufacturing because EVs just aren't selling right now.
Yeah.
Basically, they doubled down. They believe EVs were 3.2% of sales for Q2 auto sales in the US.
Yeah. 3.2 is nothing.
Yeah, that's not it's not a lot, but Ford's it's quite literally the exact same thing as Meta with the whole metaverse thing. They're putting billions into a product that they believe is the future, but I don't know. You may say, the people don't want it, quote unquote, the market just hasn't caught up yet. Who's to say?
Yeah. I don't know. It's weird, right? Like I get it that the F-150 Lightning is sort of their flagship EV truck, obviously.
Yes.
But you just go back to a gas powered F-150. It's been the best selling vehicle in North America for what 40 or 50 years straight.
Some ridiculous amount of time. Yeah.
And I didn't say truck. I said best selling vehicle. Right? Like,
yeah. The F-150 is like a square body F-150 is the symbol of America.
Oh yeah, and believe me, you see just as many of them driving around. Well, 10-1 population size, but still, you see proportionally just as many driving around Canada. F-150s everywhere, right?
It's a dependable car.
Obviously, well, as everyone knows, I have an F-250 that is going on 23 years old and is still got another 23 years in it, as far as I'm concerned.
I believe it. So with that said, I think I'm ready to move on to Thursday.
Already made the waste management joke, and nothing too flashy about IBM. Obviously, we all know who IBM is, and I think that's like
really nothing flashy about Whirlpool. They make quality products.
Yeah, Sands, Las Vegas.
Oh yeah, report. You're right. Heck, I didn't even notice that. You're totally right, though.
Sometimes I can be correct about some things.
Dave, I think we've said this. A broken clock is right twice a day.
That's right. Thursday before open, American Airlines, AbbVie, Hasbro, Honeywell, Southwest, Keurig, Dr. Pepper. Oh, Keurig is part of that Dr. Pepper thing.
That is a funny way to talk about the number 2 best-selling soda in the U.S.
But is it number 2 because of Dr. Pepper, or are those numbers inflated because of Keurig? That was the light bulb that just went off in my brain.
No. So it's not by like market. From my understanding, it's not by market cap. It's like what Americans buy. Like Coca-Cola is your number one soda in like the red can.
Yeah.
Then Dr. Pepper, then Pepsi, and then like Sprite and
then everything else after that. Yeah.
RC is criminally underrated, and I will die on that hill.
Okay. I will let you die on that hill.
Wow. American Airlines. I mean, let's go ahead and hit it. American Airlines down about 1% this week. I want to know. Somebody tell me what happened to American Airlines at like July 25th. That would be yesterday. So right after earnings, stock crashed like 12%, 12.5%. Then immediately recovered up 1%. Don't ask me why. I don't know. $1.09 a share actual, $1.05 a share estimated. And this is gonna be kind of cool as we kind of go into it. American Airlines is the world's second largest airline, and they are not a discount airline like Southwest is. So we kind of get to see two duopolies here, or not duopolies, excuse me, two sides of the same coin.
Right.
Two different pages in the same book. American Airlines, again, is second largest airline company in the world, which I didn't realize until today.
Yeah, I would have never guessed either. I mean, obviously, I know they're a big airline.
Net income is down 46% from Q2 2023. So they're right there in the Tesla club. Net income was $717 million, which is a surprisingly low number to say the least.
Mm-hmm.
I don't fully understand how it goes. But my understanding of the earnings call, I've only flown American once, and it was a terrible call. So, or terrible flight.
Mm-hmm.
And I don't really. This is the point where I'm stalling for time, where I'm trying to find the article that I was reading earlier.
Yeah, I'm just trying to think if I've ever been on an American Airlines flight, and maybe I have, but if so, it wasn't memorable enough for me to be like, oh yeah, that was American Airlines.
Yeah, it was a red-eye flight, and I was next to like some very young girl and her mom, and I got kicked the entire way from San Francisco to Charlotte.
Well, that sounds fun.
It was lovely, and because we took off in San Francisco at like 11 p.m. So yeah, that said, so I know the big thing with American was that their top line revenue fell drastically. Because what they wanted to do is they wanted to encourage customers to, and basically borderline strong arm customers into buying tickets directly from them instead of like third party sellers.
Right. So Expedia and that sort.
Yeah, Expedia, Kayak, and I mean, yeah, that kind of stuff. And apparently people really didn't like that. Because the big issue from my understanding was that, so I mean, especially these large airlines like American, a lot of their revenue isn't from me and you, it's from business travel. It's from corporate customers. And in this, corporate customers did not have access to all of American Airlines fares and tickets. And that alone cost $1.5 billion in revenue over the last year.
Oh, ouch.
Yeah, people did not like that. Like, hey, this might surprise you. Real quick, American Airlines, guys, who's your CEO? I have it here. Robert Isom. Hey, bud, just, little corporate America tip. Most of your major corporations either have their own in-house travel agency or have partnered with one.
Right.
That's just, and if you start alienating, I mean, I'm sorry, but like this is one of the dumbest things I've ever heard. Like, most of your revenue comes from corporate customers who we all know use a travel agent. Why?
So don't alienate
your literal bread and butter.
Yeah.
I don't get it.
Yeah, no, neither do I.
So with that said, I do want to drop all the way down to Southwest. This is while still in Dave. I am flying Southwest tomorrow. And I need to check into a Southwest flight very soon, actually. 58 cents a share actual, 51 cents a share estimated going into Southwest, down about 1% on the week. So it's cool. Dave, you ever flown Southwest?
Same thing. If I have, I would have been like a connecting flight somewhere in the U.S. And if I did, it was not memorable enough for me to be like, "Oh, that was a Southwest."
You would have remembered Southwest. It is the cattle herding airline.
Okay.
Here's what everybody who doesn't know who's never flown Southwest.
Honestly, before you get into that, honestly, I'm just used to that because the Canadian Airlines, Air Canada, and WestJet are cattle herding anyway. So I would have just thought that was normal.
Southwest doesn't do assigned seats.
Oh.
24 hours before your flight takes off. So if your flight takes off at 6 p.m. on Saturday, you check in at 6 p.m. on Friday night. And the order in which you check in determines the order in which you board the flight. So if you are the 50th person to check in, you're the 50th person to get on the flight.
That's an interesting way of doing it.
Yeah, it's been a very
okay. I guess I've never been on a Southwest flight then because I have never had that experience in my life.
Yeah, that's what I'm saying. You would have remembered. That's why a lot of people you either love Southwest or you hate it. I mean, personally, I'm a Southwest fan because, I mean, God, it's cheap. If I'm being just fully honest, it's a budget airline.
Yeah.
And I can go see my in-laws in South Florida for like $117 round trip. It's kind of nice. Which is sadly not where I'm going tomorrow. I'm got to go on a little business trip this week, boys. That said, so their net income was just like Tesla. Again, we're seeing the Tesla thing again. They made $7.3 billion in revenue in Q2, which is their highest quarterly revenue ever. It's not close. 367 million of that was profit, which is less than half of what it was a quarter ago on less revenue. Significantly less revenue. And so their seating has been called free for all. I mean, that's kind of what it is. I mean, it's not like Spirit Airlines where you just start punching and eventually you get on an airplane. Whoever beats himself to the front of the line first. I've never met anyone who says I enjoy flying Spirit. I'm just going to say it. But that said, and yeah, Southwest not doing great. And one of the reasons they're saying is, and this has been common, we've talked about it for a couple weeks now, budget airlines are hurting bad. They are across the U.S. And a lot of that being to rising jet fuel prices, which I mean is kind of out of their control. Yeah. American Airlines will see a bit of hit to the bottom line, but nowhere like Southwest do, who's already flying passengers on a profit of like $1 per seat per flight. Fuel prices go up and they're kind of just screwed. Yeah. When Lambo, Matt, you haven't seen my garage. I have 2 in there. Maybe 3. But yeah, so one of the big things they're doing.
Listen, I already bought 3 Cybertrucks earlier in this episode. I can't just get a Lambo too. Come on.
So one of the big things they're doing is they want to kind of distance themselves from the budget airline idea, probably start charging a little more and a few other things. And one of the big ideas of that is thank God, finally, they're getting rid of the free-for-all seating, and it will now be assigned seats.
Which makes sense, right?
Let me tell you, I can also say the free-for-all seating is a nightmare when you're traveling as a group because everyone has to check in.
Right.
And man, I think about a year ago, we were traveling with 2 people. And because the way Southwest works is you have A 1 through I think it's 30, and then B 1 through 30, C 1 through 30, D 1 through 30 till the flight's filled up. Mm-hmm. Man, I was like A 19, and the people I were traveling with were like C4. It's bad for literally everybody.
Right.
But yeah. And let's go ahead and hit the second best. Is it KDP? Is their ticker? Yes, it is. Keurig Dr. Pepper, the second largest soda in the U.S., up about 1.5% this week. 45 cents to your actual, 45 cents. They hit the nail on the head. Sales are up 3.4% year over year to $3.92 billion for the whole company. That's not just Dr. Pepper, but Dr. Pepper definitely helping that number.
Yeah, for sure.
I think it was operating income. I believe I just wrote income, which for me, my notes usually means operating income. It was up 30%. 152 million for the quarter, which is massive. I mean, if you like coffee and you like good soda, KDP is the stock for you.
Yeah. People rag on me for just drinking instant coffee, but I'm okay with it. I will die on that hill. So
Yeah, that is your hill to die on, my friend.
yeah, you've seen me post about that before, and yeah, people just rip me, and I let them. I'm like, go for it,
I mean, you're
because that
paying.
is engagement farming on X.
I say you're paying for it. You're drinking it. I mean, who really cares?
Exactly.
So with that said, Dave, I'm ready to jump into after close. I only have one that I want to hit.
Yeah, Texas Roadhouse.
Yeah, how'd you know?
Because that's the biggest name after close on Wednesday, basically.
So
Thursday.
Let me first say I have been seeing. I think Dividend Dude was who tuned me into Texas Roadhouse. Who knew? Like, what the heck has happened with Texas Roadhouse? It is a brick and mortar. I mean, we'll get into this in a second because we're gonna get into economic theory in a second as we're already over 6:30.
That's fine.
Yeah, I have thoughts on Texas Roadhouse, and they're all good for once. Stock's up almost 40% year to date.
Wow.
And is up almost 50% year over year and up over 200% in the last 5 years. Up, let's see here, about 1,500% since over the last 20 years.
Wow.
Texas Roadhouse is killing it. $1.79 a share actual, $1.64 a share. So anyway, doesn't know, Texas Roadhouse is a casual dining restaurant chain. Statistically saying one of the things millennials killed, quote unquote. Dave, this is one of your favorite topics. Let's talk about McDonald's $5 meal.
I ate at McDonald's today.
Proud of you.
And even though I'm still mad at them, I put my differences aside. And of course, everyone knows I'm mad at them for not having the $5 value meal available here in Canada. But anyways, I still had a Big Mac combo today because I did. I don't eat at McDonald's very often. Well, I guess semi-often. I guess it depends what you call often. Like once a month, that's not overly often, right?
No, I mean I'm probably about in that like exact same boat you are.
Yeah,
Like
every 4 to 6 weeks or 3 to 5 weeks. Like
I don't even want to say like it's because I want it either. It's because like usually because I'm out and I'm busy and I'm like, oh, this is right here, and
yeah,
if I don't
the
stop now, I'm
convenience
not
of it.
eating. Yeah, like especially like usually when I go, there's a McDonald's right next to my dog's vet.
Yeah,
So if I don't go to McDonald's, I'm just not eating typically.
right.
But either way, so Texas Roadhouse, like God, what? Let's talk about McDonald's $5 meals, and Burger King has one too. They lose money on those meals.
Yeah.
And going into that, fast food is like record high prices.
Yeah.
So the $5 meal isn't meant to make money because it's not. It's losing money. It's why it's only here for the summer. It's meant to try and convince customers that McDonald's food is so good you should pay a premium for it. But so let's back up. McDonald's, Burger King, Wendy's, all the other fast food places, record high prices right now, which means that for your fast casual restaurants, they cost about the same as an average fast food meal. So like your Chili's, your Texas Roadhouse, and even to an extent like your Logan's or even your Outback are, especially for just, if you're drinking water and you're just one or two, 2 or 3 people, are comparable pricing, but you get better quality food, you get more food, and you get table service. So restaurants, again, I like Chili's, I know is like, I think one of, if not the fastest growing restaurant in the United States right now by revenue. Texas Roadhouse is right there with them. I mean, Texas Roadhouse, I mean, they're kind of just doing their thing. But when you can go to, when your choice is Texas Roadhouse or the McDonald's drive-through, I'm going to Texas Roadhouse every time. Again, you get better quality food, you get more food, and table service for roughly the same price.
Yeah, so actually, that's a great point because right there is the picture of the actual Big Mac and fries I ate today. And you want to take a guess at how much I paid for that?
I don't know what the Big Mac index is in Canada. I can't quote it.
So that's obviously just the regular combo of Big Mac fries and a medium drink, right?
Mm-hmm.
Yeah, so $13.55 Canadian, and you're 100% right. For $5 more or whatever, it's probably $20 at at a place like you're talking about, sort of that more sit down service, right? $20 plus tip, maybe you get up to 25, but for say 10 more bucks or less than 10 more bucks,
I would say I'd go as far as say less than 10 more bucks.
yeah.
I'm just thinking, man, that's about $13 is about what I would pay for a Big Mac combo here in the U.S. too.
Are you saying you would pay 13 USD?
Give or take. I mean, I don't want to, but that's about what they charge me.
Huh.
I mean, let's just look it up real quick. I've got. I gotta say, I am a fiend of the food apps. I don't go to McDonald's much, but I can still get like free fries every time. Let's look it up. So let's look at McDonald's. So let's see. Where is the Big Mac meal? All right. So if I order a Big Mac meal right now with a medium Coke and a medium fry, it is $11 before tax, $10.99.
So mine was 13.55 all in. That was after tax, Canadian. So how much would the tax be on that $11?
Let me see if I can check real quick. Let's see here. It would be, and granted, I mean, this is North Carolina state tax.
Yeah.
Would be $14.97.
So you'd be paying 15 US dollars for the exact same thing I got for 13.55 Canadian.
That is what this says right now.
Okay. I suddenly feel like I got a great deal today.
I was gonna say, I was like, that's only $9.80 US.
Yeah.
Which is less than the listed menu price, at least where I live.
Interesting.
And I live in a low cost of living area.
Yeah.
I like to think that I do.
Yeah.
But yeah, before I depress myself more, Dave, you ready to hit Friday real quick? I only got one on Friday.
I most certainly am. Let me find the Friday one. Which is the one from Friday?
Yes, the poison for Cusco.
Okay. I don't know what happened with this picture. Which one do you want to look at here?
Triple M.
3M. Yeah, I saw it there. I'm just seeing what else.
Feel free to scroll through. Colgate would have been another good one. Colgate's a good dividend king. But unfortunately, I only looked up 3M.
Oh, there we go.
And which is a good one to look up. Dave, 3M stock's up almost 24% today.
24% today.
Yeah, it is up about 23% for the week.
What did 3M do? Because haven't they been having like problems for like years now?
I mean,
obviously the products that they make are great, but I mean I don't know, because I've been hearing people all over Twitter like, oh, I'm selling my 3M, get rid of 3M, blah blah blah.
I actually didn't know about this. No, you're totally right. 3M peaked in January 31st, 2018, and has been straight downhill since. Darth, yo, what's up, bud?
Yo, Darth,
kind of catching us at the end, but I mean, hey, happy to have you here. But yeah, you were. I did not know that about 3M. Yeah, 3M doing something right. $1.93 a share actual, $1.68 a share expected. Big thing was that sales were like significantly better than expected. In Q2 2023, sitting at about $6.25 billion, which is still slightly down. About we're going to call it about 50 bips down year over year.
Yeah.
But adjusted net sales were up about 1% year over year. So, we'll take it. So that puts sales growth at a little more than 1.2% year over year. And I mean, like, it's hard. Like, when we could sit here, we could do a whole podcast on 3M, because God, what doesn't 3M do?
Yeah.
Like, if you can think of a stock market sector, 3M is there.
Yeah.
I mean, that's all there is to it. But and on top of that, they raised their outlook for the rest of the 2024 fiscal year, saying that they still see 0.25 to 0.5% more sales growth still coming this year. And also, so they raised their minimum EPS for the year target from $6.80 to $7. So that's, I mean, they're thinking pretty good about themselves right now.
Yeah.
And again,
it does sound like a turnaround from what we've seen, all this doom and gloom about 3M for the last 3 years, right?
I hate to say that too, because I mean, we even look back to like a year and a half ago, doom and gloom was still $2.31 a share EPS.
Right.
Like, I mean, like, we're going to say doom and gloom, but I mean, let's be very clear. At no point was anyone worried about the long-term health of 3M.
Exactly. Right.
Like, that is a company that's been around since 1902, and I like their odds of being here in 2102.
Yeah.
Not saying you should invest in them. Do your suitability analysis, not investment advice, but yeah, it'll be a cold day when 3M goes under.
Right. What else do you have for Friday there?
You know what? Let's just hit Colgate real quick because I'm in a good mood today.
Sure.
Why not? Let's hit Colgate. Colgate, because I mean, it's a fun dividend stock. It's toothpaste, people. Up about 3% today, up about 1.5%, 1.3% on the week. You know, let's be fair. Colgate, you know, just casually been around for more than 200 years now. 2% dividend yield, 91 cents a share actual, 87 cents a share expected. I mean, oh, and they did raise their outlook for the rest of the 2024 fiscal year. And I want to shout out to the American consumer real quick. So Colgate, primarily known as a toothpaste company.
Yeah, if you look at that the actual name of the company is Colgate Palmolive, so that means you also probably have dish soap or some other type of Palmolive products.
It's one of those conglomerates in the grocery store. They are everywhere. But I was going to say, toothpaste demand was significantly higher than expected in Q2. So, like, quick round of applause to everyone at home for brushing your teeth.
Yes.
It's time.
Everyone thanks
thank
each other for brushing your teeth.
and just for the record, while you're at it, floss. Your dentist will appreciate it.
Right.
But yeah, overall, they're expecting annual profit growth by as much as 11% year over year this year, with revenue, with overall sales growth being as much as 8% this year. So, again, yeah, big round of applause to everybody at home for brushing your teeth. It's you need it, folks. Go to the dentist, get your cleaning every 6 months.
I believe that I actually have Colgate. Right? I'm not brand loyal. I will just kind of go and whatever's the least
I buy what's on sale.
Yeah, buy whatever's the cheapest. So if that's Crest or Colgate or Aquafresh or whatever it happens to be, but I do believe that I have several tubes of Colgate in my cabinet right now.
I'm looking through. I'm looking through the list, and I'm willing to bet that Colgate owns multiple of those toothpaste you just named.
Well, Crest is made by Procter and Gamble. Aquafresh could
fair.
be made by either Colgate or Procter and Gamble. So who knows?
But I will say they make I didn't know this. Colgate makes Fabulosa. Love that stuff.
What is that?
It cleans your floors.
Oh,
they also make Pine Sol. I didn't know that.
Yeah, interesting.
Yeah. Again, shout out to all of you for brushing your teeth. That is how I'm going to end this episode of the pod.
Actually, no. We're going to end it with nothing investment or business related. Well, it's kind of business related. Are you going to see Deadpool and Wolverine this weekend?
Not this weekend, no, because I will be out of town for work.
Right.
Which is I'll actually be out of town for work for the next week and a half. Woohoo!
Probably not going to catch it anytime soon.
No, but I do really want to see it. And I have a feeling that as soon as I get back, my wife's going to make me take her, which she'll have to really twist my arm on that one, guys.
Yeah. Oh, yeah. After me, because obviously I'm your favorite, but everyone's second favorite Canadian, Ryan Reynolds.
I always forget he's Canadian.
Literally, his Twitter handle is @VanCityReynolds.
I have never followed him on Twitter.
I'm sure you've seen him come up though, Van City, because he was grew up in Vancouver.
And for the record, my second favorite Canadian is Jim Carrey.
Yeah, Jim's awesome too. So
I didn't know Dwayne Johnson was Canadian. What?
No.
Well, I googled famous Canadian people and Dwayne Johnson comes up.
So, Dwayne Johnson did play a couple seasons in the Canadian Football League. I know that. Actually, I think maybe his.
Yeah, he's from Hayward, California. I don't know where that came from.
You know what? Possibly his dad might have some Canadian connection or something like that. I don't know.
I also didn't know Michael Myers was Canadian. Oh.
Yeah,
All
Mike.
right. Okay, I take that back. Jim Carrey is now my third favorite Canadian.
Yeah, Mike Myers, Seth Rogen.
I can't put anyone over Austin Powers.
Yeah, Mike Myers. Dan Aykroyd, John Candy, also Canadian.
I knew Dan Aykroyd. I didn't know John Candy.
Yeah. All righty, buddy. Thank you again so much for joining me this week on the Weekly Close Live.
Of course.
As always, had a blast talking to you. It's been great.
Thank you all for tuning into our longest episode ever.
This is actually, yeah, we're at over an hour 15. And I'm okay with it. I'm cool.
We had a lot to talk about.
There was a lot to talk about. It's so weird, right? Like what was it, about 3-4 weeks ago? We were like, how are we going to fill 40 minutes?
And we didn't. No, we very much did not.
Awesome. Thanks again, Joseph. Definitely not Dividend Dave. I just noticed that again.
Yeah, I've been switching it up a little bit.
Be sure to join us again next week. Definitely don't want to call it a special announcement, but we do have a very important announcement coming up soon in the next few episodes of the Weekly Close Live. So be sure to come back. If you're watching on YouTube and you haven't done so already, hit that subscribe button. Just do it. It's absolutely free. Doesn't cost you a dime. And if you're following on X, if you haven't done so already, hit the follow button. And we will see you here again next week. Like I've already mentioned, be sure to check out coming out tomorrow morning, Saturday, July 27th, a brand new episode of the Passive Income Podcast with Alexander the Investor, where him and I had another amazing conversation. All right, Joe.
All right,
have
Dave.
a great evening.
You too.
And we will see you here again next week.